Welcome to Code. Okay. In this video, I want to quickly show you top three sectors to buy Nigerian stocks in 2024. So for the rest of the second half, I want to show you the sector to focus on if you actually want to make good money in the Nigerian stock market. So in this video, I'm going to discuss the top sectors, and guess what? I'm going to show you how to actually find top sectors in Nigerian market to buy stock. So this is very, very important. So let's get started. So first, a disclaimer, the ideas shared in this video are based on personal research. So they are based on my personal research and calculations. Kindly do your due diligence before you invest in this company stock. Please note that the stock market comes with a lot of risk due to uncertainties. And I would strongly advise that you vet my recommendation based on your risk profile. So what are the things that you're going to learn in this particular section? Now, first one, I want to show you why buying stocks in top sectors always make good returns in both long and short term. This is very important. Then I will show you how I spot top performing sectors using charts. Now, not just charts, I'm going to show you how to use the Nigerian Stock Exchange weekly reports to spot top performing stocks. And then you're going to see my top two stocks that are poised to deliver huge return in the next 6 months. So that means between July and December 2024, these particular stocks are actually a must watch right now. In short, there are three, but then one is already up by over 80%. So I had to take out that. I will discuss it. There is actually one of the top sectors, and then the rest two most likely are coming from the other sectors. And then we'll also show you fundamental analysis of these stocks and why they are strong buy. So let's get started right now. Now, why should I buy stocks in top performing sector? Now, this is very important. If you want to save yourself the stress of analyzing stock that you think will do well, please focus on sectors that are doing well. Now, number one reason is that you most likely be following the money. You know why? You're not the only one tracking sectors that are doing well. There are institutional investors in the market who are spending billions and billions of naira in data gathering, reaching out to industry leaders, policymakers, CEOs, finance managers of different companies. So they can easily tell which sector is actually going to perform well. And then they even use a lot of macro data to come up with top sectors or the next best sector. So when they do that, what happens? They'll most likely be investing in company in that sector. So when you follow sector trend or sector rotation, you most likely be buying stocks institutional money is tracking. And there is nothing like being in the market earlier before them, right? Now, when you go into the stock or when you buy a stock before they come in, they most likely push your prices higher. Number two, sector advantage. Sector advantage will drive 80% of your stock price to new high. Now, if you look at the stock prices and how they move, it is not the financial statement that is responsible for that increase. Most of the increase, most of the changes or movements in stock price are driven by sector events, sector perception, right? Sector perception. So when there's a news that will most likely move companies in a particular sector, people start buying their stock, even when there is no financial statement. So understanding the fact that 80% of stock prices actually driven by sector events, then what happened? You go for sector rotation. So that means when you buy stocks in top performing sectors, you most likely be experiencing increase in what? Market price. Now, sector rotation is the most profitable stock trading and investing strategy. Sector rotation is the most profitable stock trading and investing strategy. If you truly want to make money in Nigerian stock markets, forget every other thing you have been taught. The number one strategy is sector rotation. Sector rotation help you move money from one top performing sector to another. That means before you get into the market, the first question you must answer is what is the top performing sector right now? So by understanding the top performing sector, you would most likely find yourself in one of the best company. So that is very key. If you look at the trend that has played out in the Nigerian stock market from 2020 down to 2024, you will see that stocks that are in top performing sectors tend to do well. In short, majority of the top performing stocks for the year, they actually come from top sectors. So please note that this is very important. And sector rotation always work. So for me, I always look for the top sectors, and then I will then find companies in that top sector. So this video, you will see how to find companies in top sector. Now let's move to the next part. Now, how to spot the next top sector. So please watch how I'm going to show you the top sectors in the market using both charts and NSE weekly reports. So let's start with the charts. Now, this is a chart of Nigerian Stock Exchange ASI, and ASI right now is sitting at 99,468 basis points. So I want to add other indices to the markets. So here I'm going to add the NGS Industrial Index, the NGS Oil and Gas, NGS Consumer Goods, the NGS Insurance, as well as the NGS Banking Index. Now, all these index I'm adding right now, they are index that helps you track the performance of sectors. You know, the market is made up of subsectors or sectors. We have the banking sector, the consumer goods sector, the oil and gas, the industrial, and the insurance. And in each of these sectors, that's where you have the companies that are listed. So before you buy a stock, always start with sector rotation. Always start with top performing sectors. And if you own an existing stock, also check the sector that stock is categorized. Now, another advantage of understanding sector is that you can easily tell why a stock is doing well or not. Because when government comes up with a policy that's going to drive certain sector, you'll be rest assured that stock in that sector will react. So what I do most times is I start by looking at the government policy, and then I connect it to the top performing sector, and then from there I'm able to drill down to companies that are in that sector that will do well before I then carry out financial statement. So financial statement is always the last thing I do whenever I want to buy a stock. The first thing I do is to check the top performing sector. Second thing I do is to carry out my technical analysis to look for stocks that have been oversold and are emerging from the bottom. So the final thing I do is the fundamental analysis. That's why I call it the ETF model. Many people first start with fundamental analysis before they move into technical analysis. So please, for me, I do more of economic analysis before technical and then fundamental analysis. So this is a chart showing all the subsectors of the NGS index and as well as the performance of each of the subsector. If I want to check the top performing sector right now, like sector that are trending, sector that is emerging and is still reset, not old, I look at the monthly time frame. So you can see here, monthly time frame. This is what I use. So I use the monthly. By looking at the monthly, I can easily tell sectors that have been doing well in the last 30 days. And 30 days is still recent. I don't use weekly because weekly for me is noisy. I don't use daily. So I look at monthly. So any sector that have been doing well in the last 1 month, most likely you will see something that is actually driving that sector. So in the last 1 month, NGS Industrial Index has done 0.37, 0.45%. Oil and gas is up by 9.32%. Insurance is up by 4.13%. And then, 6.56%. Banking sector is up by 4.13%. And then the consumer goods sector is up by 0.13%. Now, within this particular region, the NSE All Share Index is already up by 0.32. Yes, the NSE All Share Index is up by 0.32. So what does that mean? It means that almost all the sectors have outperformed the NSE All Share Index, except the consumer goods sector. Consumer goods sector is down by minus 0.13, and then you see industrial sector is doing 0.45. The NSE is 0.32. Sorry, the consumer goods sector is outperforming. So all the sectors are outperforming the NSE All Share Index in the last 1 month right now. But I'm not interested in all the sectors. I'm interested in top three sector. So top three sector right here is the oil and gas. Oil and gas is up by 9.32%, and then followed by the insurance sector, which is up by 6.56%, and then the banking sector is up by 4.13%. So my top performing sector right now are the oil and gas, insurance, and banking stock. So if I am looking for stocks to buy right now, and I'm looking to hold them for the next 1 month, 2 months, 3 months. Then my stock should be coming from the oil and gas, insurance, and the banking sector. That's how to pick stocks. So that automatically helps you to weed out other sector. Now, other sector. It doesn't mean other sector will not produce top performing stocks, but this will give you an idea of where the money is actually going to. Because at some point, industrial sector was actually leading. So let's expand it to year to date. You can see on year to date, from January to today, top performing sector is industrial sector, up by 70%, and then followed by the consumer goods sector, up by 39.63%. And then you have the oil and gas doing 39.13%. Now, the NSE Offshore Index is up by 33%. Now, other sectors that have underperformed the NSE this year are the insurance sector, up by 22.98%, and then the banking sector. Now, you can see something from year to date is from January to June, July, right? So the sectors that have underperformed the market from the first half of this year are the insurance sector and the banking sector. In short, you can explain why banking sectors are down. Simple reason, because of the recapitalization, right? So a lot of investors think that bank earning will be diluted because of additional issue of shares. So generally, banking stocks have been down from January to June. Now, what happened? It means that the banking sector is picking up gradually. So those stocks, those sectors that didn't do well between January and June are looking to lead the market in the next 6 months. So that automatically tells you that there might be a possibility that NSE Offshore Index might rally higher this year, because the sectors that were laggard will most likely be leading. And if they start, then the market index will rally higher. So you can see what sector rotation can do for you. So by looking at this trend, you will see that the top performing sector are now going down. So industrial sector, which was leading between January to June, is now down below, almost at 0 point something percent. The consumer goods sector is also doing the same thing. So now look at the last 1 month. You see that these two sectors that were leading between January and June are now the bottom of the chart, which is the industrial sector and the consumer goods sector. And the ones that were lagging, which is insurance and banking, are now at the top. But oil and gas have always been leading from January till date, and most likely is still up. So that means number one sector that is currently hot is what? The oil and gas. So if you're looking to buy good stocks, find one in oil and gas. Now, when you're buying in oil and gas, it doesn't mean you're going to be buying random stocks. Make sure you focus on stocks that are still emerging from the bottom. So that would help you buy into stocks with low downside risk and high upside potential. And then the insurance sector is also key. The banking sector is key. So this is the first way to look for top performing sector in the market so that you can buy your stock. Now, another way to look for top performing sector in the market is to go to the NGS website. This is another method. The NGS website, you go to data. From data, you locate market reports. Now, you see that weekly report that is being posted on NGS website. They are very important. Many of us ignore them. Many of us don't look at them because we feel, oh, we don't need them. But then there is a lot of information you can extract from that particular weekly report. So let me, okay, this is it here. So this is the weekly report. So I like to look at the recent weekly report. So this is the most recent weekly report. By Friday, you should be expecting the one for this particular week. So let's use last week reports. Now, this is the report for July 5th. So let's look at it now. You might probably read up other things and, oh, turnover of 2.25. I'm not interested in all this, even though they are also important. One of the things I need here in this NGS weekly report is to go to this particular section here where you have all the index and their performance. This is what I'm interested in. All the index and their performance. So here you see the NGS consumer goods, you see the NGS banking, NGS insurance, and then yeah, NGS consumer goods. This is it here. NGS oil and gas, and then NGS industrial sector. Every other one here, ignore them. Every other index you see right here, ignore them. I am only interested in sector indices. So first one is I look at the monthly. Pay attention. This is what I'm interested in. The monthly is where I want to see sectors that are doing well. sectors that are still moving, sectors that I can still go for stocks that are emerging from the bottom. I don't want to buy stock in sectors that are largely overbought. Sectors that have been rallying higher and might be going down, just like industrial index right now. Now, it doesn't mean industrial index will not do well. That we definitely find stocks in industrial index, but then it's telling you that the overall sector, majority of the companies in that sector might be going down. Why? Because they've been extremely overbought. So I look at the monthly performance, which is the yes, this is month to date right here, month to date. Now, if you look at this monthly, you will see that here, let's look at the banking. The banking index is up by 3.87. The insurance index is up by 2.62. And then look at the consumer goods index is down. You can see here 0.69. Oil and gas index is up by 3.10. Then if you look at the insurance index right here, we have discussed that the industrial goods index is doing 0.22. And then, so I think these are the core index. Now, which of them is top performing from here? You will see that the banking, which is 3.87, insurance 2.26, and as well as the oil and gas 3.01. So if you look at the industrial index 0.22 and the consumer goods index of minus 0.69, they are down. So that also aligns with what we saw on chart. So whether you use the chart or you use NSC weekly report, you would still find the same sector that are doing well. So you can see how both charts, weekly reports, and the charts can help you find top performing sector. So whichever one you think is easier to use. For me, I prefer the charts because on the chart, I can quickly look at the trend and quickly call up each sector and know what is happening. So from here, that tells me that the banking sector, the insurance sector, and the oil and gas are actually top to watch. Now, by finding these particular sectors, I like to also go straight to the chart to see what is happening. So NGS banking, so I want to see where NGS banking stocks is currently sitting. Now look at it here. This is the NGS banking sector index. Now on the NGS banking sector index, can you spot this key level right here? Can you see this is a major key level right now? You can see here. So the NGS banking index from January 2024. So let me expand this to my daily charts. All right, this is it here. Now you see, this is the NGS banking sector index. Now you can see that from January, right? January started from this point right here. Yes, right here. You can see the banking index went from 888 to top a high of 1090. So we saw a double top. Double top is always a bearish signal. Market touched here, couldn't break out. And then we saw a massive dip in between January to February. We saw a brief rally, but the market could not sustain it above previous high, and then we saw further dip. So this tells you that the market for the index is actually down. But right now, we're seeing something that might be painting a picture. When we're telling us that market might be looking to recover from here. Now, you see how this index dipped down, found support here, pull back, and then this region also acted as support. Now you see a breakout. You see here, this is a major key level to watch right here. This is the major key level to watch. You can see how this market has played here. 1, 2, 3, 4. And then finally, the banking sector index broke out of this key level. And then right now we're seeing a pullback. So if this market pick up from here, then we might see the banking sector rally higher. So banking sector could move from 846 basis points to reach 1,045 basis points. So this tells me that the banking sector might be picking up very, very soon with what I'm seeing right here. And if I decide to draw, I can draw my trend line from here to connect this region right here. So this means that if the banking sector is rallying, we might find first resistance around 971 because of this major key level. And if it breaks out, then most likely be touching previous high of 1,087. So banking sector is one to watch out for right now. From this chart, you can see sector has been beaten down, and right now we are seeing a gradual recovery. Then the next sector is the insurance sector. the insurance sector. You can see here, I've already mapped out my key level on insurance sector. Look at it right here. From this region in January, rallied here, pull back. So the insurance sector has been down generally from January till date. Now you can see from here, expecting key level, 1, 2, and now we finally saw a smaller retest and then a breakout of the key level. So the insurance sector has just broken out of this key level. So if it continues to rally higher, we might see a retest of previous high because of this double bottom formation. So this shows that the dip might be over and the market might be picking up again. So insurance sector is one you should watch out for. Now, if you look at the results declared in insurance sector so far, they've been very impressive. One of the major supporting factor in the insurance sector is elevated interest rate. A lot of insurance sector are reporting gains on their investment securities. In short, is helping to boost their profits this particular year. So this is my own take. Then if I also move to the oil and gas sector, the oil and gas sector is largely supported too. The oil and gas sector is largely supported, so we are seeing a minor pullback from here. But I think the oil and gas sector will continue to rally higher because of the event that is playing out. In short, the fuel scarcity currently running out right now might actually be a reason why oil and gas sector will pick up because very soon a lot of oil and gas importers, and also dealers are most likely looking to increase their prices, and that would also help to boost their revenue. That's for companies that is able to manage costs. So I'm only interested in companies that are able to manage their cost and generate higher return, and companies that are also looking to save cost on petrol import. So I'll tell you the stocks that I'm watching for in this particular sector. So that's my take on how to spot stocks in top performing sector. You can either use the chart or you can use the NGS weekly report. So here are the top sectors, top stocks that are watching in each of these sector. But then one is already up. So I'm taking out one already. So here I have the Veritas Capital. Veritas Capital is already up by 80%. In short, I've sold another portion of my exposure in this particular company, and I've taken profit and I've exited my capital. So whatever is running on Veritas Capital for me right now is just an extras. I've sold off a larger portion of my holding in Veritas Capital. Now, what is exactly responsible for the huge run, massive uptrend in Veritas Capital? Now, Veritas Capital is one very good penny stocks to buy in the insurance sector right here. When I entered Veritas Capital, I entered around 0.63, between 0.60 to 0.63. And then look at where Veritas Capital is currently selling 1.2. Could have been responsible for this massive uptick on Veritas Capital. Let me show you why that happened. Now, Veritas Capital declared um, first quarter profit that actually beat the whole of 2023. So let's quickly look at it here. I'm trying to launch the financial statement of Veritas Capital and Capital Cube just to make the whole process easier. Now, if you look at Veritas Capital financials, here, this is the Q1 results. That's the trailing 12 months after Q1 results. Now, you notice here, this is 1.2. 1.2 divided by 0.34 will give me an average of 3.52. Now, what does that mean? If I value Veritas Capital trailing 12-month EPS using a risk-adjusted rate that is twice that of the government bond or treasury bill. So 1.2 divided by 0.36, that's to give me 3%. If I do 0.4, that's to give me 3 naira. So that means if I assume that I'm going to earn 20% from treasury bill and I'm doing 2 times, that's 40%. So it means that Veritas Capital should be fairly valued at 3 naira. So when I spotted this stock was selling for 63 kobo. So it means that my fair value of Veritas Capital, if I want to factor in whatever error, should be between 2 to 3 naira. So then, but the stock was selling for 63 kobo. So that was a massive undervalued stock. Now, you could also wonder why the stock has been going on full beat back to back because of that. Veritas Capital full year results in 2023 is very, in short, it's not even close to, I'm trying to look for, yes, it's not even close to the first quarter 2024. So that is one of the reasons Veritas Capital is actually doing well. They've recovered the full year results in just a single quarter. So that's Veritas. So while I'm waiting for Veritas to open, I would want to quickly call up the next stock, which is UBA. Okay, this is Veritas Capital right here. See, you see the massive volume on Veritas Capital. Can you see here? Massive volume. So this is it here. So let's look at the Q1 results of Veritas. Now look at the Q1 result of this company right here. Let's look at the Q1 results. All right. Okay, this is the Q1 results. January to March 2024 against January to March 2023. Now look at insurance revenue from 1.6 to 6.3. Insurance service result from 6.15 to 3.6. Before the insurance contract, this is after the insurance contract. Net investment income from 401 to 4.3. Can you see here from 401 million to 4.3 billion? Now look at what I'm interested in here. Look at the EPS. EPS 5 kobo in Q1 2023 and then now 82 kobo in Q1 2024 from 5 kobo to 82 kobo. Now let's look at the full year results of 2023. Let's look at the full year result of 2023 just to show you why the company's stock is actually rallying higher. Full on result of 2023. So this is, yes, this is it right here. Now look at it here. This is 2022 against 20, you can see here 2022 against 2023. Now look at the EPS of Veritas, 40 kobo. Can you see here? 40 kobo in the whole of 2023 and in just a single quarter. This guy had covered up for the whole of 2023 EPS, 82 kobo. That's almost 2 times. So you could see why this stock had actually pushed higher because of it. And when my fair value on this stock is sitting around 2 to 3 naira because of that fair value calculation. So my fair value calculation is around 2 to 3 naira. And this stock is selling for 1.2. Now it still doesn't mean that the stock is a buy right here because for me, once I'm sitting on a sizable profit, I sell some stocks, I make sure I lock in profit and exit my capital and let the remaining one run. But then if you want to buy, it's at your own risk because Veritas Capital is already above my entry price. You can see where the stock broke out into new year high and then rallied higher. So Veritas Capital is one that I watched before and I was sold for 80% gain. Now the other stocks I'm looking at are UBA and Total. You know, our top three sectors are insurance, banking, and oil and gas. So, in short, all the stocks I'm buying right now are actually within this particular sector. Now, insurance is actually holding an average of 40% of my portfolio right here, and Veritas Capital is actually one of them. And there are also other insurance stocks that I've mentioned in my community, which I would want you to take advantage of right now before they rally higher between January and December. I've already taken my time to pick few insurance companies that I know will do well. And then in the banking sector, I've also mentioned several banking stocks you should watch out for. Now, for the fact that the banking sector had been down between January and June, and then for what I see on chart, looks like they're picking up. Then you also need to pay attention to banking stock because I see a lot of capital appreciation in banking stock between July and December. And UBA is one to watch out for. Watch out for UBA stock in the banking sector. So if you're looking for one stock that will provide ample room for capital appreciation, pay attention to UBA. Now, this is UBA on chart. This is UBA showing me very good setup right here. Now, you can see how UBA was sitting, how UBA had dipped from January. You can see here, 33 naira to reach a low of 23 naira right here. And then you will see the setup on chart respecting this counter. We call this counter trend line, a line that is moving opposite the overall direction. Look at how the stock had respected this line and then also respecting this major key level right here. You can see it touched here for the first time, touched it for the second time, rejected it, and then moved higher. Now, I'm expecting UBA. If UBA is able to break out of this minor key level right here, which is also the counter trend line of 24, UBA might be looking to retest 33 naira. So if you're looking at the upside potential, 33 minus 24 That'll give you 9 naira. So 9 naira divided by 24. That means UBA might probably be offering an average of 37, minimum of 37% upside. For someone that keys in at 23 naira, then and then looking at the downside risk down to 19 naira here. So this is where my downside risk is actually sitting now. But I think UBA might be looking to rally higher because of the overall event that's playing out in the banking sector. So pay attention to stocks like this, because any attempt for this guy to break out of this counter trend line, we might see a rally at 37% to previous high. And this is a very good dividend stock. UBA is one of the top dividend stocks in the market right now. So this is another catalyst for those that want to key in early ahead of year-end rally, because I am so sure that there will be a lot of rally on UBA stocks for those that are looking to take advantage of dividend declared. And these guys are going to declare huge dividend next year. Yeah, someone might ask, what of the earnings dilution from the issue of shares? Definitely their earnings will be diluted, but it's not going to affect them significantly because of the massive profit they are generating this year. So look at the massive profit, look at the massive jump on this company's financial statement. Let's even look at UBA financial statement to explain that. This is UBA on the Nigerian Stock Exchange website. Now, any other financial statements you get outside the Nigerian Stock Exchange, for me, is not reliable. Yes, they might have picked it. I don't know. I don't even know how to explain it. So my number one place to get financial statements for decision making is Nigerian Stock Exchange website. So it's key. So this is UBA Q1 results right here. Yes, 3 months. You can see here 3 months March 2024. You can see interest income 119 to 308. You see net fees and commission 28 to 62. Operating income 173, 173, 175 to 378. You see profit before tax 61 to 151. Profit after tax, the same thing is profit for the period 53 to 42, and then you see basic diluted earnings per share 1.47 to 3.96. Now, even if I carry out my fair value calculation on UBA based on these results, what is their trailing 12-month EPS? So I will go up here in capital Q, UBA. So yes, yes, yes. So let's see the trailing 12 months of UBA on capital Q. That's if the Q1 result has been updated. Yes, see, this is trailing 12 months. Now, 21.5, 21.5. So 21.5, and I discount it by 0.34, or I even use 0.40 to be extreme. Right here, you can see 0.40. So it means that UBA should be fairly valued around 53. 53, you can see here based on the current EPS. 53 based on the current EPS. So, like for me, I like to factor in error. So I don't just assume that my fair value calculation on the stock is correct. So if I want to be fair on this analysis, first I want to pick the previous high of 33, so which is where my first target is. So if UBA is hitting previous high of 33, then I might be looking to sell and then let the remaining one run. But then it's looking like UBA might be a stock that might be rallying to 40 naira very, very soon from the price of 23, because it's looking like a massively undervalued banking stock. So that is one stock to watch out for in the market for the rest of the half year. Now, the next one is Total. Now, one thing I like about Total stock is that Total is not just in a top performing stock, like which is oil and gas, number one. Total is also looking to cut its input costs. And there was a news recently that Total just signed a contract with Dangote refinery. This is it here. You can see on router, that was on 17th of May. So for me, I think this is actually a good news. TotalEnergies strike supply deal with Dangote on Nigerian refinery. So if this is going to impact on the company financial statements, one of the things I see right here is there'll be massive reduction in landing costs. Massive reduction in landing costs, number one. Number two, there will be massive reduction in FX. So that means the company reliance on FX will also reduce, because they no longer need to rely on FX to bring in short, landing cost is very key. So even if they pay Dangote in USD, the point is the cost of bringing in that inventory from supply point to their storage facilities will be very, very low, unlike when it's being imported. So either way, there's still going to be reduction in landing costs. So that is, I think, is bullish for Total Energies. Now, another thing I think would also be responsible for my bullish bias on Total Energies is their recently released Q1 results, which also align with my analysis. If you look at Total Q1 results, it was massive, it was very impressive, and everything was point. So if you look at that, then it means Total is actually going to benefit from event that is playing out. So one is in the sector that had been leading from January to date. Both in first half it was leading, and both in second half is also amongst sector that might likely be leading. And then if you look at the first scarcity right now, this guy would also benefit just like they did last year. In short, one of the things that I found out in Total is that Total did not rally as expected in 2023 during when subsidy was removed, according to government announcements. So I think this might actually be the year that Total will shine. So let's look at the results of Total. What is the Q1 result of Total so far? When I saw this result, I was quite impressed. Now look at it here between January to March 2024 and January to March 2023. Revenue went up by 99%. Profit before tax went up by 162%. After tax went up by 176%. And then what's the EPS like? The EPS right here went up by 176% from 12 to 33. So these are massive is a massive growth in Total financials. Now, if I do my fair value calculation on Total, for me, I'm factoring in the growth in oil and gas. It might probably look like Total is a bit on overvalued, but then because of the growth in oil and gas and the fact that it's in a sector that is benefiting from trend, that will not stop me from buying the stock. So these are the three stocks that I'm looking to go in that already have a position in, and I'm also looking to ride them throughout the rest of the year. Now, it doesn't mean that they are all the stocks that I own. I just give you a glimpse of the stocks I've recommended so far. This is Total right here. You can see how Total is bouncing off a major key level that was tested in 2016. You can see, look at the pullback right here from a high of 390 pullback, and then so far in June, Total delivered 20% gain, and then I'm expecting this gain to continue to rally because we've seen a pullback to key level and then a retracement from here. So Total is a stock to watch, but then Total is already above my average entry price. So I already recommended my average entry price in my community. So if you're looking to go into Total, is at your risk right now. That's the reason why you should join our community, because when I do this research and I come to the community to drop these stocks, it's always important, it's always to your advantage when you get in early. So my advice is learn to get in early on this stock. So if you rush into buy Veritas Capital at your own risk, UBA is still within the buy range. Total is above my buy range, even though it's still close, but the downside risk is becoming wider. And then I would strongly advise that you exercise caution when you are buying Total Energies. But then I see a lot of upside. If oil and gas stocks are going to pick up, Total will be one of them, because from different angles, both from technical, fundamental, sentiment, economic analysis, these guys are looking to pick up for the rest of the year. Now look at how I just recommended stocks in three sectors that are prime for appreciation. That's exactly how to pick stocks. So if this is the first time you're watching this video, kindly hit the subscription button, turn on the notification bell so that when I release top recommendations like this, you'll be among the first to get notified. And if you're looking to join our community, just go to globefolio.com. It's very simple. Go to globefolio.com, register. Here, just register on globefolio.com. You might register on Globefolio. This is it here. Just log in or register. Once you register on globefolio.com, it is in your account that you'll be able to select subscription plan. Now, when you select subscription plan, then you automatically see all the stocks that I'm buying here. These are the subscription plan. And then when you subscribe, also make sure you reach out to us via our website. You go to Globefolio Limited at gmail.com. You can send a mail to us so that I can add you to our community. So thank you so much for taking our time to watch this video, and I hope to release more insightful recommendations like this.